Hello and welcome to the Genuine Learning Blog. My name is Melissa Galasso, and today we're going to talk about a new update to the conceptual framework for FASB. So FASB has been working on the conceptual framework. The board is already written, and we've discussed on our recent blog the elements of a financial statement, updating the definitions of assets and liabilities and revenues and gains. On the same day, they actually issued Chapter 7, which is on presentation. So we did kind of separate them intentionally for the blog, but they were actually all issued back in December of 2021 while we were on our 2-week break. And so today we're going to talk a little bit about what's changing and how that might impact financial reporting. So Chapter 7 is part of the financial accounting concept statements. So we call these concept statements because they are not GAAP. They are the theory that FASB board uses to write GAAP. So the board is trying to kind of have an understanding of, okay, well, how do I prioritize various things and how do I make decisions about what is an element or how this should be presented on the financial statements. And they have these theories so that when they write a particular ASU, there's theory to support it. And so this update is going to supersede portions of Concept Statement 5, which is recognition and measurement. So kind of interesting that recognition and measurement are getting edited here. The other thing to note that is Concept Statement 5 is related to business enterprises, and Chapter 7 of Concept Statement 8 is going to address both nonprofit and for-profit entities. So when we talk about presentation, what does that mean? It means it's how do we display the line items, the totals and the subtotals on the financial statements, right? So we already have the elements, right? We have the assets, liabilities, we have the net assets, we have equity, right? We know what these elements are, but how do we display them? When do we total them? When do we subtotal them? How do we aggregate or disaggregate? And when should that be required? So again, when we think about these line items, they are depictions in words, right? The actual element and number of the elements. But we don't, for example, give every cash account, right? We tend to aggregate it. But we might disaggregate other items on the face or potentially in the notes. And so what this is trying to help us understand is when is something required to be on the face versus when is it supposed to be potentially somewhere else, or when is there optionality. Now, it's not premised on having a particular format or subtotal. So they're not trying to go around, changing how this presentation is. A lot of times the formats, the subtotals, those are already in practice, and future accounting standards may change them, but that's not the intent of this standard. So the theory behind this is, okay, well, how do I know what needs to be presented on the face? And again, we're not talking about recognition here because that's sort of a separate point. We're talking about, well, what is useful from a decision-making perspective? And so when we try to decide what to present, right, it relies heavily on, well, what is the objective of financial reporting? And so going back to Concept 1, that is to provide financial information about the reporting entity that is useful to existing and potential investors, lenders, and other creditors in making decisions about providing resources to the entity. And so a lot of times when we're thinking about this, right, how do we get decision useful information? And sometimes there are choices for determining whether we want to make that detail on the face or whether we want to provide more detail in the notes. And again, it comes back to cost benefit, right? As well as that decision useful information that we talked about in Chapter 1. So in terms of what is the big impact here, it identifies factors that the board needs to consider when determining how things are supposed to be displayed on the financial statement and gives priority to certain factors. So as we mentioned earlier, it addresses both not-for-profit and for-profit entities. The prior standard, or the prior concept statement technically, did not address not-for-profit entities. And so that is one of the changes in this scenario. The other thing that's really interesting that, you don't often hear standard setters say, right? They assume that there's some theoretical basis for the standards that they write. They actually explicitly stated, which I think is bold, that there is no theoretical basis for the concept of OCI or for netting. So they basically said there's no rationale besides the fact that prior standards have created this thing called OCI. Now, if you know George Beckwith, he is a wonderful person. He's a past member of the Private Company Council, or PCC. He lives here in Charlotte where I live, and so I've had the opportunity to chat with him several times, and he would tell you that OCI is just random, and there's no theoretical basis for it as well. But to have that stated by the FASB, I thought was a pretty bold statement. And so basically, they feel like, well, it's just based on standard setting; it's not based on theory. The other thing that they said, which I was very surprised by, which is there's no conceptual basis for aggregation of debits and credits, also known as netting, right? So why do we recognize a gain on sale of PP&E, but we recognize gross revenue versus cost of goods sold, right? And so we just have, but what they're basically said is there's no theoretical basis for it, and it should be determined at the standard level, right? So whether something should be netted or can be netted is a standard as opposed to a theory. And so when we look at this, they basically came back and said netting, in terms of gain versus revenue or expense versus loss, that is going to be based on the ASUs as they write them, not based on the concepts that are going to help them write those standards. So that's the basics of the overview. Again, it's not a very long standard. You can absolutely read it. It's a very readable standard in terms of this. But I, once again, want to point out Christine Bodison, who, again, big fan of, because she says exactly what she's thinking. Being a former, she's a professor, very, very theoretically oriented, and really is a gap purist to some extent, which I'm a big fan of. And she dissented again. This is not her first dissent, and that's something that I really like about her. She's not afraid to dissent, and she's not afraid to speak her mind. And her dissent is actually really well written, so I would encourage everyone to take a look at it. But she dissents with the theory that there's no theoretical basis for OCI. You should have one, otherwise it shouldn't exist, right? So she thinks that's an error in the conceptual framework, not necessarily in the ASUs that created it. So, and she even gives her rationale for what is the theoretical basis for OCI. So definitely recommend a read there. She also believes that there should be some type of theoretical basis to support the coordination between the performance statement and the statement of cash flows. So that's your income statement or your statement of activities if you're a nonprofit, and your cash flow statement. The concept statement says that should be resolved at the standards level. Again, not putting into the conceptual framework, but letting each ASU decide that as they go through. And she thinks this is what creates problems in application. So she dissents again, saying we really need to solve the theoretical basis for this so that we don't have problems when we're trying to go and write ASUs. And then she also disagrees with the gross versus net. She believes that, again, should be theoretical instead of one-off every time we write a new ASU. And I tend to agree with Christine in this area, but that's my personal opinion. Again, the other 6 members of the board disagreed with us. So, their sense ruled in this scenario, but I did really enjoy her theory here, and I really enjoyed reading her basis, which I usually do. So again, this is just a little bit of heads up on what we can expect from standard setting going forward. Concept statements, again, are not GAP. They're the theory that the board uses when writing GAP. And so we want to make sure we just understand how they are thinking differently going forward as they write future standards. So I want to thank you guys so much for joining us today, and I hope to see you on a future vlog. Have a great day, guys. Bye-bye.